by the Business Journal. And they came out and said the title was, "Did your house make more money than you did last year?" I was like, what? And I was like, and then I knew where they're going with it. I'm like, yeah, with appreciation, depending on the price of your house, like I bet it did make a pretty good chunk of money. And it says, depending on where you lived and your salary, your house may have made more money than you in the red hot housing market in 2021. According to Zillow, which found home values in 2021 grew more than the median household income in 25 of the 38 metro areas it studied. Appreciation of homes grew by over 100,000 in 11 of those markets.
Jesus.
So it was like, yeah, prices went up drastically. And if you say 20% and you live in a market that has a $300,000 house, which is a lot of market in Texas, that's expensive because our property taxes. But if you go to some of these other markets, like going from 300 to 360, yeah, they very well made of like.
And that's why when you ask, is the market going to crash? It depends where, right? Like I do believe you're going to have some markets that are going to take a bigger hit than others, right? You have some markets, and we're going to touch on that in a bit, of overvalued markets. There are markets out here that are just they've gone up way too much. But when you have what you have in Texas, and especially in San Antonio, is that you have all these people that their home values have gone way up in California, the coastal cities, everything, that they're able to sell that, capture that equity, come over here, buy a hell of a house, and still have money left over.
Mm-hmm.
So that's the attractiveness of Texas, is that while, yes, it's still, to a lot of people that live in Texas, it's expensive, but to all these people who live in the coastal cities, to them, everything's on sale so much cheaper.
We had that discussion the other day about just like how investors in different markets make so much more or so much less and stuff like that. Because like you compare like San Antonio to say a place like Vegas, where our average house is 300, but out there their average house is 500. Would you rather make 20% on 300 or 20% on 500? And you times that by ever how many houses that you do in a year, it makes a big difference. So when you have those rising prices of homes out there, that your average house in California is $1 million and it rises 20%, that's $200,000. You put 20% down on your house, it's like, yeah, you're walking away with $600,000 or $400,000 or $500,000. And now when you come here and see our houses, $400,000 or $500,000 buys a pretty nice house. And you can almost buy the things cash. The thing that they don't realize is our tax basis is so much different, to where, yes, you buy that house $500,000 and you go out to California and they have a 0.2% tax rate. It's like, oh, my property taxes are next to nothing. But then they come here and they're like, wait, my property taxes are $15,000 a year. Like,
yeah.
That's like my payment out in California. You're welcome. They're like, oh, no, thank you for taking prices through the roof and bidding everything up like that, because it's exactly what it is. And those prices haven't even really hit yet, because right now the only tax increases is the tax increases from 2020 that are being priced into a lot of things right now.
Yeah.
Because of taxes don't certify until July. And that's when everyone says, okay, now you have to put this down in your escrow. You have to factor this into everything, and it goes off that new number.
So I think we talked about this before. You brought that up through one of our talks about taxes, how people are not realizing that this level of appreciation is going to affect their taxes come next year, and it's going to be a huge hit on their tax bill. So, like, break that down a little bit better, because it's like you're having this massive appreciation. People are thinking like, fine, I'm not going to sell. I'm not, I'm just going to hold on. But when your neighborhood just went up, an extra 50, 60, 100 grand, your property value just went up that much.
Okay. So like, play this out. 2020 pandemic starts in April or March, whenever we had the shutdown and stuff like that. And like April, May, like prices almost went flat. And then from there, it took off. That was really only about half the year that we had that big appreciation. So come around of summer of 21 last year, you only caught that rise in prices from basically June through December. So prices went up, call it 8, 9, 10% from that time frame. Come around to summer of 22 now, and prices are still on a tear. All of last year, prices went up, say, call it 20%. Well, now they're going to those tax rates. Instead of 8%, they're going 20%.
Mm-hmm.
And now everyone's going, oh my God, they're valuing my taxes for this much. That's insane. And when those taxes certify in July and your bank pays those taxes in December, your escrow is going to be massively short. So come around spring of next year, they're going to be like, ooh, we're going to increase your escrow, your payment $300-400 a month because we need to make up this massive shortfall that you have in your escrow based on the taxes. So we not only are we trying to catch back up what we're short, we're trying to increase your payment to get ahead of where we were at to make sure your taxes are being paid. Well, what's going to happen now when 2023 comes around and the price increases of 2022 have now been taken into effect? So now you get in, say we go up another, say it slows down a little bit, goes back to 15%. Now your taxes went up 15%. So that's 8%, 20%, 15% in 3 consecutive years. And then now those taxes certify in July of next year, and you're like, man, hopefully my payments, my escrow's caught back up. And when they make that payment in December of 23 and 24 comes around, and now your escrow adjusts again for another $200-300 because they still underestimated are still shorting your escrow, your payment's gone up $400, $500, $600, $700 a month from where it was in just 3 years.
Yeah.
Just on the housing cost. So that's when I think this thing's really going to slow down.